Hello, Jan here from Berkshire Hathaway Home Services, the Loft Warehouse, here with another one of my monthly market updates. It's been several months since I have been in your inbox with information about the housing market, interest rates, inventory, etc. And I wanted to make sure that I connected with you by the end of the year to talk about where we've been and where we are going in 2025. We are going to discuss the effect the election had on the housing market and what we can expect based on historical data, interest rates, home prices, inventory, sales, and more. So let's get started. First, we're going to talk about the election. The presidential election specifically has a very unusual effect on the housing market. And so this graph right here shows typical reduction in sales during the fall, during the sort of October and November timeframe, which seasonally we always experience a dip from the summer during that time of fewer people in the market, probably mostly people just dealing with getting back to school and things like that. But an election year, and this happens every 4 years, the average dip in new home sales between October and November is 15%. So it goes from 10% to 15% just the year of the presidential election. Now, what happens to all of those buyers? So in this graph, home sales went up after 9 of the last 11 presidential elections. You will see that except in 1980 and 1988, home sales went up from the year of a presidential election to the year after. For example, in 2016, there were 5.4 million sales, and in 2017, there were 5.5 million. So now moving on to interest rates. Everybody wants to know if they are going to come down, and most people expected a more significant reduction in rates after the Fed lowered its fund rate both a few months ago and then again just last week. And interest rates are going to be affected not only by the federal fund rate, but on the labor market, the outcome after the election, and inflation. And right now, inflation is still way too high. So in this graph shows you the inflation rate from 2020 to 2024, including at its peak in May of 2022. Which is, by the way, right before interest rates went up significantly for the first time in, the last 20 years. So, as you can see, the Fed's target inflation rate, what they consider to be normal and acceptable, is about 2% per year, and we are currently at 2.7%. So that seems like a really small amount, but it's still too high. And until that number comes down, we're probably not going to see any meaningful decrease in interest rates. Mortgage rates are projected to decline. Several entities have forecasted, including Fannie Mae, Mortgage Bankers Association, Wells Fargo, and the National Association of Realtors all anticipate that rates will be coming down in Q1 of 2025. Probably their predictions are all a little bit different, but it looks like they're projecting somewhere in between 5.5 and 6%, which would seem like such a huge reduction. And hopefully will bring buyers back to the market. So as far as home prices, everybody wants to know, when will they be coming down? And I'm sorry to say that I don't have that kind of news to share with you. It does look like home value increases are stabilizing to a more normal appreciation, which is about 3% a year. So if you look at this graph, home values are forecast to rise, home prices in 2025. If you average all the projections from 4.4% increase given by Goldman Sachs to a 0.3% increase by Moody's, the average is about 2.5%, and that is a very normal appreciation. So unfortunately, there is no prediction that home values are going to go down, but we probably won't see them going up in any large and significant way. We're getting back to normal. And part of that has to do with builders. Builders are getting caught up on their inventory, as you can see here. So in the green section, we were building more than we ever had. This was pre-Great Recession. We were building more housing than we needed. And so as soon as inventory shot up, home values crashed. And then we really stopped building in any sort of meaningful way during the Great Recession. We experienced 15 years of underbuilding. That's the section in red right here. And so home builders are finally starting to get caught up, or I would say they're catching up, but they're definitely not overbuilding. We still have not stabilized as far as the housing demand and new construction sales. I think the most important thing here is to try to figure out how we can build new construction homes that will be in demand for all price points of the market. And right now, because building is so expensive, where builders are usually only able to serve like a certain segment and up of the market. That's just how it's working right now. Let me give you a little bit of a local take. So, this graph is average sales price for the past 3 years. And we always talk about, but you can see the very common seasonality of the market. Home prices tend to peak in the spring, June, and tend to bottom out in January. So that's why you see that up and down in the graph. In this case, so at the end of October of 2024, the average home value was $322,000. But if you compare that to 1 year ago, October of 2023, the average home value is $298,000. So we're talking about a $24,000 difference in average home values from 1 year to the next. So in our Metro Detroit market, and a lot of this is even further out than that, we are showing some differences than the national data that I just shared with you. So home values are continuing to go up. Let's see if we are going to outperform that national average of 2.5% appreciation per year. Be very interesting to see how Michigan compares to that. So now I want to talk to you about inventory and sales. So 2024 was a very low year for home sales. In fact, it was the bottom of the number of home sales per year, as shown in this graph. We sort of peaked in the recent past of 6.9 million home sales sold in the United States in 2021. And as you can see in 2024, we have bottomed out at 4.6, or at least that's the prediction, predicting that we will be at around 5.2. And part of that is that all of that pent-up demand, and I wouldn't say pent up, but all of the people that delayed their purchasing decisions during the election and right after are going to come back to the market. Just like that graph that I showed you previously about the year after a presidential election, sales increased. We're expecting that same effect to be more than 2024, and experts are predicting I'll probably be higher than all the sales in 2023 as well. And this comes from the census, Fannie Mae, Mortgage Bankers Association of America, and the National Association of Realtors all contributed to this data. So as far as homes for sale, looking at this a little bit differently, not year after year, but this is sort of giving you a monthly idea. So we are now starting to see that, yes, the data is seasonal. You can see those ups and downs. That there's less data in May, June, July, and there's less inventory. There's more inventory at other times in the year. January starts to increase in the fall, peak in January, February. So more homes are coming to the market. As you can see, we seem to have bottomed out sometime between 2021 and 2022, and we are back up to more homes being on the market. We certainly are not anywhere near where we were before COVID in 2019 and 18. Hope to be back up to that point. That will definitely allow us to be part of a more normal market, a more balanced market, still very much in a seller's market because of the low inventory. So that will be a benefit to buyers. So a local take, I just wanted to show you this month's supply in the Metro Detroit, greater Metro Detroit area. So a month of supply, let me explain it to you like this. We've talked about it before. A month of supply is if you took all of the houses that are on the market, right at this very moment and you froze them in time, no new houses came on the market, how long would it take to sell everything that is on the market today based on current absorption rates? And that number is currently 2.6. So it takes 2.6 months to sell everything that is currently on the market today, right at this moment. However, that is the highest of months of inventory that we have had in more than 3 years. The last time that it was this high was in mid 2020, right before the market went totally berserk. And so that is a good thing. That's leading us into a more balanced market. That means that it's not as much of a seller's market. So buyers are able to negotiate better. There's not as much competition for properties. There's not as much demand. And so sellers, not as much of a good thing. But buyers, certainly this is becoming more fair for the buyer's market. So that's the first time we've seen 2.6 in a long time. I remember when it was down, and the graph shows you when it was less than 1% at the beginning of 2022, less than 1 month of inventory. It would take less than a month to sell everything that it was on the market. So that is just a little bit of where the housing market has been and what you can expect for 2025. If you get value from these market updates, I would love to hear from you. Shoot me an email or follow me on social and leave me a DM. I would love to hear from you. I'm going to show my contact information right here. Thanks so much for watching, and I'll see you next time.